Hey everyone, and welcome to Butchie Boom. We're so happy you're here. If you're just joining us for the first time, thank you for being here. Welcome, welcome, welcome. If you're a returning subscriber or a regular viewer, thank you. We really do appreciate you. Let's get on with the show here a little bit. So, what are we doing here tonight? I have no idea. No, just kidding. We're talking about Uber and Lyft. Okay, we're talking more specifically about new and more towards the newer Uber drivers, but it can pertain to everybody. And when I'm saying Uber, as I make clear in the video we're going to be showing here in a minute, we're talking about whether it's Uber, Lyft, whether you're doing deliveries, whether you're doing Grubhub, whether you're doing Instacart deliveries, even if you're delivering by bicycle in Manhattan. Knowing the information in here, I think is going to be a benefit because, geez, we just want to make money, right? We want to do that. So we're hoping to do a little bit of information regarding tax planning. One of the reasons I'm doing the live for this video is I forgot a couple of things in the video. So I may pause along the way, or I may shoot something across the screen. I don't know, but I want to get that information out to you. I thought it was important enough not to let it go. With that said, I'm going to give it just another minute or so here before I go and show the video, but we're going to put a new video out. It'll be out, well, probably tonight. Right after this, within an hour or two, I'll get the video out, and it's going over the same information. In fact, you guys are getting the preview if you're joining us of what is in the video. Essentially, what we're doing is we're talking about tax planning for the rideshare driver. Is it, being a 1099 subcontractor, the technical stuff. That gives you a lot of leeway as far as being able to deduct a whole bunch of stuff. And some of the stuff I bet you don't even know about. Maybe you do, I don't know. But here's what we're going to do. We did a video. It's going to come out tonight, right after this. I'm going to pause here and there when I remember to insert. But I do want to talk to you about uniforms. So hang tight, and I'm going to see. I think this will just do itself. Let's find out. This is my first time doing it. I think. By George. It's here. Hey everyone, and welcome back to Butchie Boom. We're here talking about this Uber stuff. Uber and Lyft drivers. And when I say drivers, I'm saying generally, folks. This is for any part of this gig stuff, whether you're doing deliveries, whether you're driving your vehicle, whatever. This video is going to pertain to you, okay? And we're hopefully going to save you some money, especially if you're new. I don't want you to get caught off guard. So before we get too far ahead, make sure you click and subscribe wherever that's at over there. It really does help, and we appreciate it. Now, with that said, let's tell you what we're going to be doing in this video. We're going to be talking about the unpleasant tax word. We have to prepare for taxes. When we're working for Uber in most locations throughout the United States, you're considered a 1099 subcontractor. You're self-employed. You're pretty much an independent contractor, and you get your jobs using the Uber app. So it's a business, and that's how the IRS treats you. Again, I'm not an accountant or a lawyer or anything like that. Check with your own rules and stuff, but this is, generally speaking, this is how it works. Every single expense that you have associated with your business is a tax deduction. It comes off of your bottom line number. So it reduces your tax liability. One of the biggest deductions that we as Uber and Lyft drivers, and when I say Uber and Lyft, you guys know we're talking about delivery people, whether it's Uber, Lyft, Instacart, wherever. Is our mileage to and from. Fortunately, Uber and Lyft, when you've got the app on, the minute you turn it on, it starts clocking your mileage for you. And it'll give you a summary at the end of the month and tell you how many miles you've driven, how many passengers you've taken, and your income information, just your basic stuff, nothing too elaborate. At the end of the year, they'll give you a more accurate representation of what you did the month for the whole year. So, with that said, mileage is really important. Keep track of your mileage. If you're the kind of driver who may have a little snack or something in the car, with some mints or some water, those expenses are tax deductible. If you're just starting doing Uber and it's the first time you're putting your car in service, you need to make a decision regarding how you're going to claim your tax deduction for your car. Are you going to depreciate your car, or are you going to claim the mileage? Now, okay, I just want to hop in here really quick and say to you that I use the word depreciation. Depreciation is when you write down the value of the car over a period of time. And so that's what I'm referring to. And when you do that, you're able to take other deductions other than the mileage, the actual vehicle expenses. So your oil changes, your transmission repairs, and all that other good stuff that goes with it. Okay, so I just wanted to interject that, and someone will say, wait a minute, he's talking depreciation, but we're talking vehicle expenses. What is it? It's pretty much both. Okay, don't worry. I don't think you need to depreciate in order to take your actual vehicle expenses. So if you're driving an older car or something and you don't depreciate, you can still take that, I believe. Again, I'm not an accountant, but let's forget about me and get back with the video. And my understanding, again, I'm not an accountant. My understanding is, and this is what I've done, most folks claim the mileage the first year, and then if you choose to, you can start doing depreciation. It's usually which one is going to get you the better deduction. My understanding, the mileage deduction is 55.5 cents approximately per mile. So that can go a long way if you're like me in the rural areas. And it takes a distance going from passenger to passenger or waiting for the next ride, kind of a thing. So really important to keep track of that stuff. Snap photos with your camera, your phone, of all your receipts. If you go grocery shopping and you pick up Windex and paper towels for your car, when you get home, circle those 2 items on your receipt, your grocery receipt, snap a photo of it. Try to keep the receipt if you can. Okay. So I think it's important to talk about the expense tracker that we got up here. Keeping track of the expenses, writing them down as you accumulate them, keeping the receipts, maybe putting the receipts, attaching them to it with a paper clip or a staple. Paper clip's probably going to fall apart, so a staple's pretty good, or putting them in an envelope and attaching the envelope by a staple to an expense thing, so you can write it down and keep track. But most important thing is try to keep all your information together in one piece. Now, when I mentioned something that I forgot to put in the video, I want to talk about some other popular deductions that you may want to consider. So your car or business insurance. So if you're, that can be a little bit tricky, but there is a way that you can get a deduction on that. Again, I'm not an accountant, but it all goes upon, the percentage of how much you use the car for business. And then you take that number and you divide that by your insurance payment for whatever period. And that gives you your deduction. I don't do it that way. I take the mileage instead, but so you need to verify. Okay, but here's some other things. Uniforms. But wait a minute, we don't have uniforms. I don't know about anybody else, but here's what I do. When I go to work for my business, because this is a business, my shirts, especially my shirts, I buy a little big, little baggy, it's something that's an extra layer between me and the world around me. And they are used for work, and that is doing Uber or Lyft. So I write them off as a uniform. I take them off before I go in the house. I don't want to bring the car in with me until it's clean. You know what I mean? That's me. So lots of folks have uniforms. We're in business for ourselves, folks. So, for me, it's my preference to wear a shirt that's a little bit big. It's more comfortable for when I'm driving. It gives me a little extra, personal protection, I believe, from, just the world around me in these days and times. You know what I mean? You know what I'm saying? And, there's other things, too, that are deductions. So, like if you have a bad back and you need a couch cushion or something or a cushion to ride behind your back, those are deductible, I believe. So, again, I'm not an accountant, but you need to check that stuff out. Car washes, all your cleaning supplies, this is crazy, but parking and speeding tickets, the fines. You don't want those darn things, but they're deductible. So you keep track of those as an expense. All your copies, if you make copies of anything, everything that you do, write it down on an expense form. Take photographs of it with your phone. I sounded really old there. Photographs. Take a snapshot of it with your camera, and you'll keep a good record of it. Try to keep originals of everything. But I really wanted to give you that piece on some of the additional deductions that you can take. Let me shut up again so you can get back to the video. But those are tax deductions. Your cell phone, Wi-Fi, all that stuff. If you stop and grab coffee or lunch, those are tax deductions. You know what I mean? So keep track of all that, because the money that you're getting deposited into your bank account every week that's technically not all of it to keep, because now Uncle Sam wants his handout, and he's got it there, and he's not going to go away. And there's a lot of consequences for not being able to pay your taxes, such as backup withholding, which I understand that's a nasty bugger to have to contend with. So you really want to make sure that you stay on top of your taxes. If you're one of those folks who are coming out, and I'm hearing stories more and more of people making $2,000 a week, you're in the upper brackets, my friends, and I would suggest that you talk to an accountant, and you're prepared for that big gigantic tax bill that's going to come. And I don't know if it's a third or more or whatever, but for me, I'm able to really offset the miles. Check it out. I got to tell you about these taxes, okay? You don't want to, especially if you're new, you don't want to be caught in a position at the end of the year where you owe $1 gazillion and you can't pay it. So the IRS has set up where you can do your estimated taxes. Again, I'm not an accountant. You can go to irs.gov. irs.gov will give you everything that you need to do to set up for estimated taxes. So you can send that money into the IRS. As crazy as that sounds, you can send payments in every quarter and estimate what your taxes will be for the end of the year. The good news is if you overestimate, that comes back as a refund, just like if you were a W-2 employee, right? So, but if you do that and you're paying right on where you need to be, you won't be subject to that beast they call backup withholding, and that I hear is a dreaded monster. And you don't want to be accused of, or have that over your head. That's a whole different world. Bank accounts and everything. So make sure that you're saving. I'm not trying to scare you, but you have to be prepared for these taxes. Perhaps open up a separate savings account. Putting it in a shoebox is not a good idea, but putting that money away somewhere is probably a good idea if you're able to do that. Otherwise, the quarterly payments, I don't know how much to tell you because I don't know how much you're making. Talk to an accountant. Somebody will give you an idea based upon what your expenses and stuff are, what to put away. There's a formula, I think, also on irs.gov. I'll be quiet and move on, but I just really want to caution you. I don't want you to get caught at the end and say, geez, all of a sudden I owe all this money and I can't pay it, and then it's penalties on top of penalties, and it's be prepared for that. Here we go. The miles really offset the earnings a little bit, so that I'm not beaten up to death by them. Back to the miles. One more thing with the miles. It's one of the biggest deductions that you can have as an Uber driver if you drive for Uber. So whether you're urban or you get what I'm saying. Whether you're in the city, whether you're in the outskirts or up in the hills somewhere, the mileage deduction is huge part of being able to pay for the upkeep and maintenance of our vehicles. The cars take a beating sometimes, and here in the Northeast, where I live in upstate New York, sometimes I can go 5-10 miles between pickups, and it's only $3.99, and maybe a tip, maybe not. Hopefully, it's a tip. But so those miles help offset that mileage deduction helps offset that a little bit. So I'm just not eating all that gas and the wear and tear on my vehicle going to pick somebody up to take them around the corner for a second. And we all know what those frustrations are. It goes with it, but that's there are some offsets to that. And maybe you'll offset it a little more if you stop and grab a cup of coffee or something as a tax deduction. How do you like that? Okay, let's get back to this video. With Sam, because again, we've got wear and tear on our car, and we got to buy tires and oil changes and rotate tires and put brakes on the car and things like that. So when you claim mileage, you can't claim those things. If you depreciate, I think you can. So those are some considerations to keep in mind. Some states have a state tax, like New York. So you got to be mindful of what your state deductions that are allowed. Other states like Nevada does not have a state tax. The casinos pay for, I think, their state stuff. I don't know. Again, I'm not an accountant, but so just get to know your tax rules a little bit. And there's an old saying: if you don't document it, it doesn't happen. And that's why it's really important, especially with your mileage. You have to keep track of your mileage. It doesn't hurt, be as detailed as you can. You're leaving your house this morning, and you put the date down on a piece of paper, the mileage, call the mileage out. It's 5,984, or whatever yours is. Mine is actually 105,000. And then you put your destination. You're going to, for me, I'm going to Saratoga to go to work, to turn on the app. And so that would be my commuting miles. And then when I reach the spot where I'm ready to turn the map on, I just glance down really quick, look at the mileage, and I write it down. And now I'm good to go. Once the app turns on, the app keeps track of the rest of it for me. Isn't that a great thing? And then it's the same thing when I turn the app off. Now, for me, what I do is most of the time, as soon as if I'm in the car, first thing in the morning, I'm not driving down the road half hour, 45 minutes before I put the app on. It's on. Boom, from the second I leave my driveway. As soon as my wheels hit the pavement, I hit that button. Because I'm ready for work. My office is here. I'm sitting in it as we speak. And so I press that button. There's no, sense in waiting a half an hour to get to one of the bigger towns to put it on. No, and I'll get you 10 within a few minutes. I'll get a ping somewhere. So, coming home, I don't do that. If I know that, especially it's busy, I get to a certain point, all right, I just know if I take that, and the next call, they're going to send me in the opposite direction 45 minutes. Just not happening. I'll turn the app off, glance at the miles, write it down, and say, from this point on, I'm going home. And then, I try to figure out at the end of the year. But the important thing is just to keep track of everything the best you can. The IRS has very little wiggle room, so we're running good business here. And I think if we treat it like a business, we may find that we actually enjoy doing this. And if nothing else, we're getting some great experience on how to do accounting and bookkeeping. So don't forget, the other thing too is one other piece for taxes, and then I promise we'll wrap this up. If you have the ability to have a separate credit card or a separate debit card, I know a lot of folks can't. I get it's a luxury. That makes it very, very easy to keep everything separate. So all your expenses and everything that you would use for business goes on one debit card or one credit card. Both Uber and Lyft now have their version of the debit cards that you could use. But again, that's I don't know. It's hard for some folks and not so hard for others. So whatever the case may be for you. But that would be my suggestion to you. That would help keep track of all your expenses. And when you're writing, if you buy a new cell phone holder, that's a tax deduction. You buy a mint for somebody, that's a tax deduction. So keep those things in mind. And thank you so much for watching the videos. Thank you again. Thank you. And until the next time, take care, and we'll see you. I was muted. There you heard it. You're the first to hear this video. We're going to be putting more out. In fact, the very next videos, we're going to be talking about car insurance, folks. So if you're interested in this and you're new, even if you're not, you probably want to take a listen to the next video that's coming out. That'll be coming out. It's not going to be tonight, but hopefully this weekend for sure. Okay. Thank you again for watching. Don't forget to subscribe. It's been great. It's been fun. And now I'm signing off. And what would, as Paul Harvey would say, good day.